Hello class, so this is your chapter 2 video lecture, and I have to tell you I just did this whole video lecture and it didn't capture. And so rather than repeat the whole thing to you, I'm just going to walk you through this and talk to you about it. Again, I told you in the other video I was doing, I move pretty fast as I go through these problems because I do have a time limit on my videos, and also because I know you can rewind if you want to watch something again. So what I start out here is showing you right here. This is a traditional, well, let me start over here. This is a traditional income statement, probably what you're familiar with. It's the skeleton of a generally accepted accounting principles income statement that is governed by GAAP. Cost of goods sold is where you'll see your product cost. Operating expenses is where you'll see your period cost. Product costs are made up of direct material, direct labor, and manufacturing overhead. Again, this is a review of what you should have learned in managerial accounting. So I'm looking at, if you have your book, you can look at problem number 216 is what I'm working on. It's similar to your homework. I'm not going to do your homework for you, but I'll definitely help you walk through some of these problems. Okay, so in number 1, it asks us to identify each of the costs as variable or fixed. So what you're going to do for each cost is you're going to take the cost divided by the number of units. So in July, you take your cost of goods sold, $240,000, divided by 4,000, and you get $60. Same thing for August, same thing for September, and in every one of those you get $60. So I know this is a variable expense because it is the same for each unit. Then I look at advertising, and I see that that is the same for each volume, and that is fixed. Then I do shipping, and I see, well, that's not fixed, but if I divide by the number of units, I don't get the same number for each level of unit. So I know this one is mixed. Same thing for salaries and commissions. And then insurance and depreciation, I see that those are both fixed because they do not change for the level of sales. So what I'm interested in is taking these two numbers and figuring out how much of that mixed cost is variable and how much of it is fixed. Because I need to do that so that I can do a contribution margin income statement, which will help me make decisions. So I'm going to come down here and I'm going to do what we call the high-low method. And in this, I'm going to take my high level of activity and my low level of activity for my mixed expenses, shipping and salaries. My high level of activity is 4,000. My low is, 5. My low is 4. Then I take the associated cost with each level of activity. You can find this in the book. Follow along. At 5,000, it's 38. At 4,000, it's 34. For salaries, it's 90,000 and 78. Then the formula, the change in cost divided by the change in activity. So I take the change in cost, which is 38 minus 34, divided by the change in activity, which is 5 minus 4, and I come up with $4 per unit. That is my shipping per unit variable cost for shipping. Then I do the same thing for salaries. I take the difference in the cost, 90 minus 78, and the difference in the level of activity, and I come up with $12 per unit, which is my variable cost per unit for salaries. Then I take my high level of activity, and so right here my shipping, and I say, okay, if it's $4 per unit is variable at 5,000 units, my variable cost should be $20,000. Then the difference in $20,000 and $38,000, my total cost has to be fixed. Do the same thing for salaries. Then that gives me the information I need to come down here and do what we call a contribution margin income statement. And they ask you to do it based on 5,000 units. And so I've set mine up in Excel so that I can change that number. And if you see, we've got the same operating income that we had in the problem where they gave us that. But now we've done it where we've separated out our variable cost per unit and we've got our fixed cost down here. And the reason, and here's our contribution margin, that's why we call it a contribution margin income statement, because we identify that. But what I've done is I've set it up where I can make decisions. I can say if we sell 4,800 units, what is my operating income? And you notice my fixed costs are not changing, but my variable costs are. And that's why we set these up this way. These are meant to be used internally. These are not something that you would issue to the bank or the IRS or the Security Exchange Commission or an investor, but they are perfect to help you make internal decisions. So in your homework, you will be looking at, and in the in the Connect Access, I think it just shows you as problem 1, 2, and 3. But they're actually in the back of your book, if you want to look at them there, it's problem 219, 220, and 223. And in 19, you're going to be doing a traditional format income statement, which again, this is just the skeleton up here, but basically you'll have your revenue, cost of goods sold, where your product costs are, gross margin, all your operating expenses, net income, and so forth. And then you're going to change that and do a contribution margin format income statement, which is what we did right here. Organizing those by cost behavior. So you're going to have to look at those and determine what is variable and what is fixed. Actually, that's pretty much given to you, but you'll have to analyze the problem a little bit to figure that out. And then it asks you why it would be misleading to show fixed cost on a per unit basis. You can read about that in the chapter, but maybe by now you're starting to understand why you would not want to put fixed cost down here on a per unit basis. And then in problem 220, you're going to do some high-low analysis. So you'll want to look back at what we did up here. Just remember, take your high level of activity and the associated cost, your low level of activity and the associated cost. And then in problem 223, again, you're going to be doing kind of a summation of all of this using the high-low and then doing a predictive contribution margin income statement. So I hope you have I hope you enjoy doing this homework. Managerial accounting from a manager's perspective can be very informative and helpful, and so I hope you see that as you work through these problems. If you have questions after watching the video and reading through the examples in the book, please reach out to your coach. If they can't help you, they'll reach out to me, but we'll get you through this. Just don't wait till the last minute to get your homework done, and we'll talk to you soon. Thanks.